Hey YouTube, how's it going? My name is Patrick France, Senior Instructor here at VectorVest. Glad to be with you all. Thank you all for tuning in here today. I love doing these financial freedom summits and really showing everyone out there how to get the most out of their VectorVest service, or if you have just a smartphone or tablet, how to get the most out of that service and how to really manage your portfolio no matter wherever you are. Today, I'm going to be showing you how to really utilize the VectorVest Stock Advisory app, and we're going to be showing you how to manage your portfolio in a matter of seconds with everything that we have here. So before we get into it, just want to throw or preface this with the more you guys put in, the more you'll get out of today's session. So I will be asking some questions from you guys to see what kind of stocks you guys are interested in. Make sure to tune in for that. Pay attention because I'll use your stocks for our examples here today. All right, before we jump into it, just want to give everybody a little insight about myself. I've been here at VectorVest for now about 10 years or so, a little longer than that. But I started off trading or learning about trading from my father, who's been managing my family's accounts ever since I was a little kid and even before that. When I was about 4 years old, my father used to go into his computer room and spend hours upon hours going through different charts, going through different softwares, and take literally about 6 hours a day just to manage his portfolios and manage the portfolios of my family and grandparents, all of that. So what I have done, or when I was a kid, I would go in there, watch him, what he was doing. He would teach me how to read charts, how to learn what I was doing here with that. And that's really sparked my interest in the markets. Well, as I grew older, I continued to learn how to use charting techniques and charting patterns and how to recognize them and really develop my technical skills on that. And then went to school for a major in economics with a minor in psychology. And after I graduated school, moved up here to North Carolina and started working for VectorVest right away. It was a perfect fit. My father actually used VectorVest before I even started working here. So I had a little bit of an understanding of how VectorVest worked. But one of the key things that I've really picked up on here with VectorVest over the years is risk management, money management, and how to understand fundamentals. I've always grown up learning technicals, and VectorVest has provided me that much needed benefit of being able to do the fundamental analysis for me, so I can still make sure I'm using my technical analysis on really good stocks. So if you guys are ready to see how easy it is to manage your portfolio, hit that like button and let's get into it. So this is the very first screen you'll see whenever you pull up the Stock Advisory app. This is the home page of the app. On the homepage, the most important aspect that we need to always be aware of is that market timing, which you can find right at the very top center. So currently right now, the market is mildly bullish, and VectorVest advocates buying safe, undervalued stocks that are rising in price at this time. If we scroll down here, one thing that I talk about every single Thursday when we do our live streams over on our Facebook page is the daily color guard report and the special presentations. If you're brand new to VectorVest or just about to get started with VectorVest, watching these videos on a nightly basis is one of the most beneficial pieces of information you could possibly take in for yourself to learn about what's going on and make sure that you stay on top of major trends, headlines, and all of that. If we scroll down here, we get the color guard, which I'll do a brief overview of the color guard if anybody's not familiar with it already. But we use the color guard to analyze three key components of our market timing system. The first one we look at is the price, which is the prices of VectorVest composite. This gives us a better representation on what's actually happening in the market because it's not just looking at the Dow's 30 or the Nasdaq's 100 or the S&P's 500, but it's looking at about roughly 8,500 stocks as of this time. And we see when we get a green light, that tells us we're moving higher day over day and week over week. So we have confirmation of that current uptrend on a short-term basis. The next indicator we look at is the RT on the VectorVest composite, which is looking at the short-term price trend of the overall market. To keep it simple for you guys, it's cast on a scale of 0 to 2. So all you have to remember is above 1 is good and below 1 is bad. At 0.98, it tells us the short-term trend is down slightly a little bit. Some of that momentum may be waning that we've seen throughout this crazy rally we've had since the March lows of last year. But overall, market's moving about sideways right now. Would like to see that pick up above 1, but at 0.98, we're not too worried about it quite yet. Then after that, we then get the BSR, the buy to sell ratio. So if you're not familiar, VectorVest gives a buy, hold, and sell rating on every single stock that we track every single day. We use a systematic approach to come up with those ratings. We don't just have a group of guys pumping numbers and using their calculators to figure out what stock they like today or what stock they don't like today. We take a systematic approach to analyzing stocks and giving those buy, hold, and sell ratings. We utilize the buy to sell ratio to identify the health of the market currently. So if there's more stocks that have a buy than a sell, the buy to sell ratio is going to be above 1, and that shows strength to the market. If there's more stocks that have a sell than a buy, the buy to sell ratio would then be below 1, or it shows weakness to the market. So right now we do see some overall strength in the market. Then these 3 indicators are comprised to come up with the MTI, or the market timing indicator. This is looking at the underlying trend of the market, and it's cast on a scale of 0 to 2 again. So above 1, the underlying trend of the market is up. Below 1, the underlying trend of the market is down. Now, just to give you a little insight, there's a few key rules we keep, we talk about regularly here, and that's keep your eye on the MTI. When the MTI gets to levels of 1.5 and higher, that shows that the market's starting to look for a top. And when the MTI gets to levels of 0.6 or below, that generally shows that the market's starting to look for a bottom. So for an individual investor, that can be extremely useful to identify when you may want to start tightening up your stops. If you're holding a position for quite some time, you have a really good gain on it, when you may want to consider tightening that up so that way you don't give away most of that profit or give that profit back. Or on the inverse of that, when the market's had a sell-off like we saw last year, and we see the MTI tells us the market's oversold, we can look for a few things to help us identify when to start getting ourselves back in so we can capture the explosive rally that typically happens right after the bottom. So after the MTI, we then get the trend column, which shows 2 parts of the trend each and every day. The first part refers to the primary wave, or simply the weekly trend of the market. We can see it's up since the prices of VectorVest composite is higher than it was 5 trading days earlier. The second part is looking at the underlying trend, or once again, the MTI. So as long as that MTI is above 1, the second part of that trend column will be up as well. After that, we then get the calls column, which stands for our confirmed calls, and our confirmed calls are our most conservative timing system. They're our last signal we get to get into the market and our last signal we get to get out. So right now we can see that we are currently in a confirmed up situation. Now, one of the tricks or tips that I always look for every Thursday on our Facebook live sessions is looking at the advanced declines on a daily basis, especially if you're looking for a day to be getting in. When looking at the advanced declines, you're looking at the number of stocks moving higher compared to the previous day's close and the stocks moving lower compared to the previous day's close. If you want to see strength and you want the probability to be on your side, because investing is all about putting probabilities in your favor, we look for a 2-to-1 rate. So the market's moving higher today. We want to see twice as many stocks moving higher or advancing than declining. Right now, we're sitting at about 47% of stocks moving higher and about 43% of stocks moving lower. So closer to a 1-to-1 rather than a 2-to-1. Now, this tells us, market's moving higher. We have more stocks advancing and declining. So yeah, we could potentially go out and buy a stock today if we needed to. But if we really want to look for a strong buying day, we want to see a 2-to-1 ratio with that advanced to declines. Then just briefly, we'll take a look at the major indices. So the Dow is at up 0.4%, NASDAQ's basically flat for the day, S&P's up about 1/4, and the VectorVest composite up a little over 0.1%. So with that, let's go ahead. Start to show you how you can manage your stocks on the go. Now, if you guys have stocks that you want to take a look at, let me know in the comments or the chat box there to the right-hand side of the video today. And I'll start using your symbols and we'll build a watch list together. And then we'll show you how to essentially weed the garden, if you will. Get rid of the losers so that way we can free up cash to reinvest into stocks that will make us money rather than lose us money. All right, so what we do is we go to the My Watch List on the left-hand side. I'll just click on the plus symbol in the upper right. And this is where you start to type in your symbols. So let's see if we have a few symbols. Yeah, I know there's a slight delay between when you guys see this and what I see. So I want to make sure we're all on the same page. There we go. We're starting to see some symbols coming in. So VIAC, so Viacom, just tap on it to add it in. NVAX, X just by itself, so US Steel, SUBX, and don't just give me your best stocks. You know, it's okay to put in some of your worst stocks as well. We can't just have the most stellar portfolio out there. So if you guys have stocks that aren't the best, put those in here as well. SUXB, I believe it is. Oh. SBUX, there we go, Starbucks. All right, let's see, SUN. SUN, CCL, and we'll do about 10 stocks. So whichever 10 I get here. All right, we'll put an extra off just for you, Jay. Hopefully you're doing well. Glad to have you here today. Shop, we'll put in there. JP Morgan. Well, yeah, banks are coming out this week. So JPM. Put in my favorite, BAC. So we've got 1, 2, 3, 4, 5. So we've got 10 stocks. Let's go ahead and create the watch list. We'll call it Summit. Say OK. And once we put in our stocks, it'll automatically bring the best performers to the top and the worst performers to the bottom. So a lot of the heavy lifting can already be done instantaneously just by entering in your stocks. If you're brand new into the market, this is one of the first things you should do is put your stocks into a watch list and start to analyze them here. So as we can see, NVAX comes up as the number 1, BAC coming in as number 2, Shopify, and as we scroll down, we then start to see it go from more green and yellow to yellow and red. So therefore bringing us, you know, the best, the ones that you don't have to really worry about right there at the top, but the ones that you do need to worry about more, the ones you should pay a little bit closer attention to, can be found at the bottom. If you don't want to do that, all you have to do is tap on this little reverse sort button in the upper right, and it'll automatically bring the worst VST to the top and the best VST to the bottom. This is where you want to start really doing your analysis on your portfolio. So as we can see, Extra comes in at number 1, overall VST of 0.61. So let's go ahead, take a look at it, and I'll talk about 4 tips that you can use to help you identify knowing when to sell in just a second. But I want to make sure everybody is comfortable and familiar with the analysis on an individual stock. So we scroll down here, we get our 4 key indicators. They're all going to be cast on a scale of 0 to 2. And above 1 is going to be a good thing, just like before. Below 1 is going to be a bad thing. If you can remember that above 1 is good, below 1 is bad, VectorVest will make your investing so much simpler than anywhere else out there. So if you're not familiar with the indicators, let's go ahead, take a look at the indicators first and foremost. And this is a stock analysis report. You can find this on any single stock that we track in any of our markets. And if you want, you can actually go to, maybe Joey could put the link in the chat here, but if you go to vectorvest.com/FSS, I believe, or free stock and FSA, I believe, you can actually get a free report emailed directly to you. So if we go down here, we get, you know, everything we just looked at. The recommendation or the rating column, we get the value based off of the current earnings per share, forecasted earnings growth rate, profitability, interest, and inflation rates. But then we come down to our main 4 indicators that we use to analyze the stock. The first one is the RV, or relative value. Now, the relative value is looking at the long-term price appreciation potential of a stock over the next 1 to 3 years. It's taking into account things such as price and value from AAA corporate bonds, risk involved with it, prediction or price analysis, projection prices, all of that. So really giving you a forecasted earnings growth rate here, or forecasted look at the stock on how it should fare compared to a AAA corporate bond over the next 1 to 3 years. The next one is going to be the RS, or relative safety. And the relative safety in the most simplistic definition is an indicator of risk. It's going to look at the consistency and predictability of a company's financial performance, its debt to equity ratio, sales volume, business longevity, which is a big part of fundamental analysis, price volatility, and a few other factors. And then finally, the third is the RT, or relative timing, which once again is the short-term price trend of the stock. The thing that makes RT more powerful than any other technical indicator out there is it's not just looking at, hey, this stock's going up or this stock's going down, but it's looking at the momentum of that up and down trend as well. So when a stock is at an RT rating of, let's say, 1, that means it's moving sideways. 1.1, it means it's in an uptrend. The higher it is, the closer to 2 it is, the stronger the uptrend. Now, just on the inverse to that, below 1 the closer to 0 it is, the stronger the downtrend is as well. Whereas a lot of technical indicators just show, momentum or overbought, oversold, or directional. This shows both direction and momentum combined into one, which makes it extremely powerful from a technical perspective. And then all three of these indicators are comprised to come up with our master indicator VST, standing for value, safety, and timing. It's something unique with VectorVest that you won't find anywhere else, in the sense that it gives you a great overview on any stock out there from both a fundamental and a technical basis. A lot of services or other places out there will say, let's focus on the fundamentals, or let's focus on the technicals. Nowhere else out there combines the power of both to give you a better overall picture of any stock at any time. And then we get down here, we get the stop price, which VectorVest is, we've talked about in some of the previous sessions that Dr. David Paul did a phenomenal job on just before me. He was talking about the stop price. It's based upon a 13-week moving average, and it's our final line in the sand. Simply put, if you haven't gotten out by that point there, you need to sell now or hold at your own risk. So now that we've got our indicators, everybody should have a good understanding of these indicators. Let's go ahead and talk about what we see here. So just doing a simple analysis, looking at Extroff, if this was our portfolio right now as of today, this is our worst performer. It has poor long-term potential. It does have a lot of extra risk involved with it compared to the average stock out there. It's in a steady decline. So overall, this stock is not favorable. Therefore, of course, it's going to have a sell rating attached to it as well. So this is a stock that is losing us the most money in our portfolio currently. So if you're going to weed the garden, if you're going to, sell a position so that way you can free up cash to reinvest into stocks that will make you money, this would be the place you want to start at. Now, let's go over 4 tips to know when to sell utilizing the mobile app. Anybody can do this anytime, no matter where you are, as long as you have Wi-Fi or a cellular connection. So let's take Viacom. We looked at Extroff. Let's take Viacom, for example. One of the first things we talk about, or one of the first things that you'll notice is RT. RT, once again, is that short-term price trend of a stock. So when RT is above 1, that tells us the stock is in an uptrend or making us money. But when it's below 1, that tells us that it's in a downtrend or it's losing us money. So if we scroll out a little bit, let's go to a 1-year time frame. We had RT break above 1 right at the very far left of that graph. Let's find that date. Let's say it was closed at 1963. Let's just call that $20 even. Well, it stayed above 1 for quite some time, dipped just dipped for a day or so right below there, but never got any follow through. So we're not going to count that. But then all of a sudden here, the day that Archegos went belly up, Viacom got dumped. We look at the RT here, it dropped there, still sold at $70 a share. So that's still a little over 300% profit just by following the RT alone. Now, that's one great early indication. If a stock's RT drops below 1, typically it doesn't drop this quickly. This is a very severe case and a very specific case if you're not familiar with it already. But this is a good indication that can help you identify when you may want to start, considering selling, or at least at minimum tightening up that stop to ensure that you're profitable on a trade. Now, there's a rule of thumb that we talk about every Thursday, which is when the RT is at 1.1 or greater, that shows that it's a nice strong uptrend. But when it's at 1.1 or starting to fall below that 1.1, but not quite there at 1 yet, that is an even better early indication that you need to pay closer attention. And then if it falls below 1, that could be, the confirmation of, okay, I've been paying attention to my stock. It's been moving sideways. It hasn't really done a lot. The market's going higher. It's not really participating. So I'm going to take that. I'm going to take my stop. If it hits 1, I'm going to tighten it up to, let's say, a 1% trailing. That way I ensure that I'm walking away with a nice gain. So this can be a great early indication of knowing when you should start considering to sell is by looking at the RT and when it crosses below 1. The second indication of knowing when to sell is utilizing moving averages. If we go here to our settings so that way everybody can see and go to our moving averages, right now we're looking at a 40-day simple moving average. It's a great place to start off with. The industry standard is a 50-day moving average typically. So a 40-day will be a little bit more reactive, a little bit earlier to get you in before the industry standard would look at it and try to jump in, or before the big money would jump in. And it'll also get you out a little bit before we break down below that 50 days. So it's a great place to start, especially if you're new to investing. So if we go back here, let's take a look at it on the 40-day moving average. If we look here, we saw just the same thing. The 40-day or the price of Viacom crossed above that 40-day moving average right at the very far left hand of the graph, so almost a year ago. And then it stayed above that 40-day moving average. The 40-day moving average was actually a pretty strong level of support. We touched it once here. We touched it a few times here. Let me maximize this so you guys can see it better. We touched it a few times here, but we never actually broke. We broke down below, but then quickly came back, broke down below, quickly came back. It rode pretty much just sideways with it, treating it as a strong support floor. And then all of a sudden you took off, had a really nice run, broke down here on that day, pretty much the same time the RT crossed below 1. Once again, still giving you 2 signals confirming that and getting you out with about a 300% gain, a little over 300% gain. Now, I don't know about you guys. Let me know your thoughts in the chat there, but if I had a 300% gain on a position, I would definitely be a happy camper. So that's number 2. So we've looked at RT as a great early indication of knowing when to sell, and we've looked at how to use a moving average of knowing when to sell. Now, one other caveat I will put out with the moving averages is if it's more of an aggressive stock, or if it's a stock that's pretty volatile, you can adjust that moving average up or down to, customize it or fit it more towards that specific stock. A 40-day moving average is a great place to start, but it's not the end-all be-all for every single stock out there. So keep that in mind when you're looking or analyzing your own stocks, and make sure that you adjust it accordingly to the type of stock that it is and that it can be used more beneficially for you. All right, so that's number 2. The third thing is looking at price volatility and direction. Price volatility and direction is something that, especially if you're new, may take a little bit of time to get used to. But once you're looking at a lot of charts for, days or a few days or a few weeks or a few months, and you start getting your feet wet into charting, it becomes relatively easy to identify. So let's go here, or let's go back out of here, and then we'll go back to our watch list, go to the next stock. Let's look at US Steel, for example. It's a hold rating. So it's not that strong buy rating, but it's not that sell rating yet. It's kind of just middle territory. We'll go ahead and maximize this. And there we go. So looking at US Steel, the whole time, or at the very top of the screen, you'll notice that red, yellow, and green. And that indicates green for a buy rating, yellow for a hold, and red for a sell. We can see nice steady rise in price here. And then all of a sudden you had a gap up, started seeing bigger price movement, then bigger movements to the downside, bigger movements higher, bigger movements down, more volatility starting to pick up. When you start noticing volatility picking up, that can be an early sign that investor sentiment is starting to change. You're seeing more people selling, you're seeing more people buying. The people buying may be looking for more momentum, and you're starting to see essentially retailer investors out there questioning whether that price meets the evaluation and whether or not it's worth that price. And that can cause that volatility to start picking up. And when you start seeing bigger swings like this in a stock, especially if you're holding it, that is the time to pay closer attention to it, because that could give an early indication that momentum or investor sentiment is changing with the stock and could be setting up for a potential pullback in the near future. Now, this is just on your individual stocks. If we can apply this same kind of concept of looking at price volatility on the overall market as well, which if we have a few extra minutes by the end of the day, I'll take a look at that and show you guys exactly what I'm talking about there. So that's number 3. And then finally, the fourth indication to know when to sell a stock, if you're still into it, can be found right in that watch list, that sell rating. If you see a stock, if you have your stocks into a watch list of your own, and you have stocks that have that sell rating already on them, that is where, as I mentioned earlier, the place you want to start. And if you're holding stocks that were a buy, riding them all the way down, thinking, oh, it's going to come back. Oh, it's going to come back. I'm only down 10%. I'm only down 15%. Now I'm only down 20%. If it can drop 20%, it can go up 20%. I'm going to continue to hold. If that is something that you've ever had, which, I mean, even I've had some of those positions over my lifetime. But if that is a position you find yourself in, and all of a sudden you come in and you see that the stock has a sell rating by that point, this is our final warning to you to say, look, something is drastically changing with this stock, and you either need to sell now or hold at your own risk. We're not going to be able to warn you any more than we already have. You've already gone through an RT dropping below 1. You've already gone from price going below that 40-day moving average, for example. You've already been seeing the volatility picking up. This is the last thing we can tell you to know when to sell. So if you're taking notes out there, once again, to recap all 4 of them, the first one is looking at RT crossing below 1. The second one is looking for using moving averages and looking for price dropping below that moving average. Third is looking at price volatility and direction. And fourth is looking at the rating, that sell rating. So out of this list, we see Extraoff, Viacom, both had that sell rating. Let's say, all right, we're done. We've had enough. We've lost enough on these stocks. We're going to sell out of them, free up that cash. Instead of giving away the last little bit of capital we have that we could put into a new stock, instead of giving that all back and letting the position continue to deteriorate, let's just go ahead, minimize our loss, close it out now, regroup, gain our cash position again, and then wait for that good buying opportunity to jump into a new position. So we'll just simply delete them here. There we go, just by simply swiping. And now that we've freed up cash, we're ready to reinvest into stocks that'll make us money. So the first thing, as always, is we talked about right when we got started here today. The first thing we should always look at is market timing, making sure the overall market is moving in our favor. So just simply go back to the home page or the overview page. We check the market timing gauge. Right now, we're seeing the market pulling back a little bit. So we've gone from one green light to now neutral, and we advocate caution when buying stocks at this time. But for today's example, and today, so that way you guys can see how to move forward on good days. Let's say today we were 3 ticks into the green. VectorVest advocated buying stocks. We had 3 green lights across the board here. And let's say there was twice as many stocks advancing than declining. Just for this example purpose here. Everything's looking great. The markets are looking great. We have a nice consistent uptrend. We're in April of last year, right off of those bottoms, and the markets are looking phenomenal and looks like a lot of upside potential coming in. So we've freed up that cash. We're ready to reinvest. We're waiting for that good opportunity. Today happened to be that day. Well, where do we go to find stocks that we're interested in getting into? Interestingly enough, we have a whole section in the app called Picks, designed to help you find stocks that you should be looking at to consider getting into. Let's go ahead and take a look at the stock pick ideas. broken down into categories to make it easier to find stocks that I'm interested in. Hot stocks, if you're an aggressive trader such as myself, if you like momentum stocks, hot stocks is going to be the best place for you. But if you're more of a long-term, conservative-minded investor looking for, not necessarily to outperform the market, but you don't want to take a lot of risk, you just want to preserve that cash, maybe earn some dividends on that, well, retirement stocks are right there for you. If you're looking for momentum plays or just sector and industry rotation, hot industries, the top hottest industries at any given time can be found right here. And then you have some premium stock picket ideas. So we're going to take a look at those here today. Let's go into the premium watch list. And just as a side note, everything that I'm using here is strictly just the mobile app. It's the premium version of the mobile app. We have a few different tier levels on the mobile, but with the premium, this is everything that you will see with that as well. So the premium watch list, we have coronavirus stocks, we have top VST stocks, Midas Touch stocks. We're going to take a look at Midas Touch stocks. Now, Midas Touch is a systematic approach that VectorVest has developed over the years to find a winning pattern based on the charts to help you find good, consistent winners that you can be into for a couple of weeks, a couple of months, and take advantage of that nice steady rise. So let's go see LPX, for example. Just to do some quick analysis on it, has a great RV telling us it has great long-term potential over the next 1 to 3 years. We have a strong RS rating, so it has solid fundamentals, less risk associated with it. It's in a really strong short-term uptrend, so overall the stock is favorable right now. Now, the Midas Touch list is a cherry-picking list, and let me just explain that for you if you're not familiar with it. Cherry-picking lists are designed so you don't just go to the list and say, okay, LPX, that's the number one. I'm not going to look at anything else. I'm just going to simply buy that because it's at the top of the list. This list is designed so multiple different people can look at it and find stocks that suit them the best. So I may like LPX. The next person may like LGIH. The next person may like DR Horton. This is a list that you can go through, let's say the top 20 or so, and are guaranteed to find at least a handful of them that you'd be interested in. So let's go take a look at it here. We'll take a look at the graph by tapping on it there. We'll change our graph settings and we'll come down to the lower indicator and change it to earnings per share. Because if you're not familiar already with it, earnings are the engines that drive stock prices higher over time. So LPX is our first stock, and there's a few key things that we're going to look for. We want to look for a nice steady rise from bottom left to upper right in price action. We want to see a nice steady rise in earnings per share from bottom left to upper right, like a stair-step pattern as well. Well, I don't know about you guys, but that's exactly what I see with LPX. This is looking pretty promising. You have a nice steady rise in price, 40-day moving averages picking up as well. Earnings are steadily rising, and if earnings are rising, that tells us not only is the company making money, but the major analysts out there, the big money out there, is expecting them to continue to make money 12 months down the road. This is something unique here at VectorVest that you won't find anywhere else. And our earnings per share isn't just their last statement announcement put into the program. It's looking at the historical data that the earnings reports have reported, but it's also taking into account a analyst projection over the next 12 months, which is something that pretty much most people aren't able to find. It's something unique that we bake into it as well to give us a good idea of not just what the company is doing now, but what the major money expects them to do next year as well. And as the old saying goes, money goes where money grows. So if the big money is expecting this stock to continue to make money 12 months down the road, you can expect to see that price continuing to rise as well. All right, let me make sure I don't miss any questions. I've been focusing on this, so if I miss your questions, I do apologize. I will try to answer them as much as possible there. Who is not bought LPX? I know, John. That's a very true statement right there. All right, so we've gone through LPX. LPX looks good. UFPI, Nice steady rise in price from bottom left to upper right. And you can see it took a little bit of a pause or consolidation from about October or so, roughly till about February here. But then started getting an upward trend developing. Earnings are steadily rising and has made a nice steady run here over the last few months. LGIH, same situation as we just saw. You had a little bit of consolidation throughout the fall of last year, but now starting to see momentum start picking back up around mid-February and really starting to see some growth coming in as well. If you look at the earnings are also steadily rising. If we just zoom into a 3-month, because these are more swing trade candidates here with the minus touch stocks, that's a phenomenal 3-month graph. You look at that 40-day moving average, it came down, kissed that 40-day moving average once, and then quickly rebounded and shot up to where it is now. Also, as a side note, I just saw a comment that made me think of a side note for you guys. If you're on the desktop application, this is something I noticed with some of the reviews that I do here at VectorVest. When you put a mobile review, I go and look at those almost on a daily basis. But if you have the desktop application, if you have VectorVest 7, the mobile app is automatically included. So if you can have just a standalone mobile app, or if you have the desktop, you get the desktop and the mobile application together. So I just wanted to clarify that as well. All right, so DR Horton, nice steady rise in price from bottom left to upper right. That 40-day simple moving average has acted like a phenomenal support level. Seeing it break out to a new 3-month high here today. Definitely like seeing that. Earnings per share also steadily rising. And we can scroll through. Rocky Brands, Dr. David Paul was just mentioning this one. Great looking candidate. And as you can see, we can go through one after a next, and everybody out there, all 1,500 of you that are here today, as I scroll through these, some of you may like one, some of you may like another, but I'm almost 100% positive that you can all find at least a handful of stocks while going through the top 20. All right, so that's great for a swing trader, but what if you're not a swing trader? What if you're somebody that, is just looking for consistency, less risk, maybe a dividend here or there is an extra bonus, but just looking for consistency? Well, right below here in the premium watches, we have safest stocks with buy ratings. So if we go ahead and take a look at that, DHI, DR Horton coming into the list, and you'll notice this list is a little different than what we just last looked at. This list is sorted by RS or relative safety. As a retirement-minded or a long-term investor or long-term oriented investor, RS is going to be key. RS is, once again, looking at the indicator. It's an indicator of risk. It's looking at the consistency and the predictability of their financial performance or their financial results. So is this company making money quarter over quarter, year over year? Have they had a long track record of being able to do that consistently? Well, if they do, that's going to increase their RS rating. So let's take a look at some of these. We already looked at DR Horton. Just to go over the quick analysis, it has great long-term potential, has less risk associated with it. It's in a really nice, strong uptrend. Overall, the stock's favorable. Look at that. In less than 10 seconds, I analyzed a stock. You can do the same utilizing the mobile app here. If we take a look at the graphs once again, this is more of a longer-term oriented approach, more of a retirement-minded approach. So most likely you're not going to be focused on a 3-month graph. You're going to be looking most likely at 6 months, a year, maybe even longer. Well, on a 1-year graph, once again, nice steady rise in price from bottom left to upper right. Earnings steadily rising as well, telling us that the company is not only making money, but expected to continue to make money 12 months down the road. We go to the next one, Facebook, finally starting to break out, but overall, a great consistent company. Consistent performer in the stock market, nice steady rise in price, earnings steadily rising as well. ALGN, nice steady rise in price, earnings steadily rising again. UFPI, we just looked at that. Google, so a lot of your big names you're going to be familiar with. Old Dominion Freight, EPAM, let's see, Lennar Corporation or Lennar Homes, Lowe's Home Improvements. What other ones? I'm just looking at some that I may notice. You guys may notice some other ones, but overall, a lot of great performers with really strong track records to back up that price movement as well. All right. So that's where you can go to find some good, more conservative candidates. Now, I didn't think I was going to talk about it here today that much, but if you're more of a day trader, more of a really aggressive trader, there is daily boomers. I'm not going to spend too much time on it, but these are looking for high flyers to take advantage of today. As you can notice, there's a lot of sells, a lot of holds, but the main thing to look with this one is the total gain for the day. And you can use this at any point throughout the trading session. That's the unique thing about this specific watch list for you really aggressive momentum traders, day traders out there is, let's say you go out of the app, you come back a little bit later, you pull back up this list. This list could be completely different. It's constantly updating all throughout the day to bring new candidates to the top of the list or the new candidates into this list here at any time. Whereas most other watch lists are predefined on a day-to-day basis, this actually can change throughout the day. So high momentum stocks, high flyers, if we go take a quick look, I'm not going to spend too much time on it, but gapped up, maybe not the best candidate. Here's one, gapped up, taking a nice run all throughout the day. So far, it's gone from, let's call that 730 now to basically $9 on a day trade. That's a huge run right there for you. Workhorse, another big run here. And you can see it can help you find some great day trade candidates, momentum trades, to help really, capture if that's your cup of tea there. So I wanted to give all perspectives. I wanted to show, for everybody out there, because everybody's different. For you really aggressive day traders, speculative traders out there, we have something for you. If you're more of a swing trader, not necessarily watching your stocks all throughout the day, but like to trade more actively, we have Midas Touch stocks. And if you're more long-term oriented or conservative in your trading, well, safest stocks with buy ratings. One-stop shop for anybody out there, regardless of who you are and what your investment style is. So let's say we go into Midas Touch. For our example, going back to our example, markets are blasting off. We're back in April of 2020. Everything's looking good. LPX, I like that. I'm going to add it to my list just by tapping on the 3 icon in the upper right, and I can add to a watch list. Simply select my watch list from here. And I'll say no for now because we'll get one more stock. So that's one. Let's go safest stocks with buy ratings. Let's choose ACN. So we find ACN. We like that. We went ahead and purchased it with our broker. We add it to our watch list so we can keep an eye on it. And we'll say yes this time. And boom, now we've got those stocks added to our watch list. We don't have to worry about it. And one of the great things about this is, watch lists are great to do the analysis, but if you want to take it one step further and really track your portfolio, not just by the ratings and the indicators and price movement, but if you want to track it by, dollar weighting, cost averaging, putting stop losses, all of that in there, you can do so right from your smart device. So we tap on that 3 icon in the upper right again. We'll choose select stocks. We highlight all the stocks in our portfolio. And you notice at the bottom, add to portfolio. So we tap on add to portfolio, create a new one. We'll call this Summit. Initial investment amount. I'm not really going to change that because this is more for demonstration to show you guys how easy it is and how quickly you can do this. But buying them, we're not going to be shorting these stocks. Create the portfolio, say yes, and instantaneously we've now automatically divvied up our cash between the 100,000 between our 10 stocks, so roughly about 10,000 a piece. And this will track it, tell us, the total value of the position, ROI, the average gain based upon your purchase price. So this will actually be showing you how to manage how your portfolio is doing, just like you would see with a broker account. But the great thing about the VectorVest portfolios is Unlike a brokerage account, which just gives you your profit, loss, basic information, this allows you to do a little bit more analysis here as well. It gives you an equity curve, which some portfolios don't do, or some places out there don't do. You can see your equity curve of your overall portfolio in real time. If you're on real time, or intraday, if you're on just the mobile app, you can do intraday or end of day. We don't have a full day, so obviously we're not going to have an end of day graph here yet. But just to give you a little insight, let's go with one of our Facebook lists we did right here. So this was one that we did May 14th. We had end phase. I've made a few changes because we've utilized this in some of our live streams and throughout the last year or so. But you guys can see if we tap on that, this is the end of day graph. It'll show you the highs, the lows, all throughout it. You can see what your portfolio has been doing. You can look at it once again from an intraday perspective as well. And it tells you your ROI on your stocks. You can change the rank by, so you can use gain, ROI percent, gain for the day, gain percent for the day, total value. And one of the unique things, you can also use the VectorVest indicators in your portfolio here as well, which is something you're not going to be able to do anywhere else out there. So that pretty much sums it up. To do a quick recap here for you guys. One, build your watch list. Your watch list will help you start right away, right out of the gate if you're brand new, to get an idea of what stocks are really hurting your portfolio the most, what stocks you don't really need to worry about too much. So that way you can start to weed the garden to free up that cash to reinvest into stocks that'll make you money. Two, once you've freed up cash, you're ready to reinvest, make sure to check the market timing right here on the home page or the overview page, and make sure it's a good time to be buying. Unlike the talking heads on TV, we here at VectorVest don't think that every single day is a good day to buy. We look for overall good days in the market based off 8,500 stocks and not just a small segment of the market. So that way we can get into, showing you guys when is an overall good time to buy a good fundamentally sound stock, and when is not a good time to buy a good fundamentally sound stock. John's asking what happened to Drip. John, honestly, probably put in there as a hedge as demonstration, but probably not going to get into too much of that, but that would be my guess. I'd have to go back and take a look, but with, oil's taken off ever since, November of last year. No surprise to see that Drip position down there. Didn't have any stops put on it. That's what happens. You don't use stops. You forget to look at your positions after a while, and you have things happen like Drip, which could be down 80%. So good example of why you should use stops, why you should follow the 4 criteria of knowing when to sell, which once again, looking for RT going below 1 is an early indication. Looking for price crossing below a moving average is a second early indication. Looking for changes in price direction and volatility is a third indication. And then our fourth is looking at that rating, that sell rating. Now, those are just some of the VectorVest specific things that you can do. If you're using stop losses, based upon your portfolio, some of the rules that we typically go over is first and foremost, never give back more, or assuming you have, let's say, $100,000 for this example, and you're buying 10 stocks, so you put 10,000 a piece into each individual stock. Never lose more than 1% of your overall portfolio value in any individual position. So 1% of the 100,000 is 1,000, which is 10% of the 10,000 you put into each stock. So therefore, never lose more than 10% on any individual trade, which would be the equivalent of 1% of the overall portfolio value. Obviously, you could do less than that, but no more than that. You want to be able to fight another day. And if you lose too much in one trade, if one trade goes wrong and wrecks your whole portfolio, it's really hard to recover from, and it's really hard to get back on track from. But if you only lose 1%, you still have 99% of the portfolio available. That is a lot easier to come back from overall. So that's the 1% rule. The second rule is, and this is more personal, so ask yourself, set yourself a gain or a goal for your gain there. Are you happy with making a 10% gain, 20%, 30, 40, 50, 60, 70, 80, 100, 200, 300, whatever that goal that you have set in place, make that your goal, write it down. And once you hit that, take your profit. That is your goal. Don't get greedy. As the old saying goes, bulls make money, bears make money, and pigs get slaughtered. And then last but not least, the 50% rule. And that is anything over a 10% gain in any individual position, never give back more than 50% of that profit. This is ensuring that you take a small win rather than letting a small win turn to a loss. So if you have a stock that's, let's say up 20% and your profit target was, let's say 50%, you haven't made it to that 50% yet to close out. You made it up 20, some news comes out, market starts pulling back, and all of a sudden you're only up 10% now in that position. Take that 10%. You can always get back into it later, but at least you're locking that profit in instead of risking it and giving it back and end up possibly even taking a loss. Now, obviously you could do less than that, but no more than that 50%. That 50% rule is really a nice saver, or a nice cushion, essentially, if you will. You could do, if you're up 20% and you pull back to 15%, you could take that 15 instead of going all the way back to 10. But whatever you're comfortable with, these are just general rules of thumb to help you out, though. All right, so we've got a few more minutes. I'm wanting to make sure, are we going to 12, or how much time do I have left here, Joey? Give me 1 second. Let me see if I can get Joey here to see how much time we have. What's that? All right, awesome. All right, cool. All right, so I have till 12. We got about 3 more minutes here. Let's go ahead and do this. This is something that everybody seems to enjoy on our Facebook sessions. If you guys have stocks that you want to see analyzed, I'll show you for the next couple of minutes how fast you can analyze any stock using the watch list. Also, if you guys have questions regarding anything that we talked about here today, feel free to put those questions in the chat there. I'll have some time, hopefully after this presentation, I can answer them if I don't get to them right now. And speaking of the live stream that we do, every Thursday over on the VectorVest Facebook page, I do a live stream there talking specifically on the mobile app and going over different features coming out, different tips and tricks utilizing the mobile app. And our goal over there is to help you learn how to become financially independent through utilizing the markets. So if you guys want, feel free to go over to our Facebook page, like the page, turn on notifications, and come join us every Thursday at 11 a.m. Eastern as we do, that free education. It's open to everybody. You're more than welcome to come and join us and take advantage of that. All right, so I see a few stocks coming in. Let's go ahead and analyze some of these. So Baidu, BIDU, and you guys should already be familiar with the analysis. So just to see how fast and how easy this can be. So Baidu, poor long-term potential, a little bit better than average risk associated with it, but timing is key. Timing at 0.45 tells us it's in a really strong downtrend. Therefore, the stock is not favorable. Also, speaking of timing, when I say timing is key, once you own a stock, the fundamentals aren't going to change that drastically typically when you own a stock. Once you own a stock, the number one most important indicator to be aware of or keep your eye on is RT. Because once you actually own a stock, at that point, all you care about is whether or not the stock is making you money or losing you money. That RT indicator tells us that. So once you own a stock, if the RT falls below 1, that's why it is so important to know that stock is now not making us any more money. That's now actually starting to lose us money, and therefore it doesn't make sense to hold on to. So hopefully that gives you guys a little extra tidbit here for today. All right, HZO is the next one. Let's go ahead and take a look at that. So HDO, great long-term potential, solid fundamentals, so less risk associated with it. However, the timing at 0.87, you're starting to see it slow down a little bit, maybe pulling back a little bit. Overall, it's a good stock, but once again, timing is key once you own it. So therefore, probably going to be staying away from it for right now. Let's see, Palantir, PLTR. Poor long-term potential, does have some additional risk associated with it. It is in a steady decline right now. Therefore, the stock is not favorable. And we'll do a couple of more here. DDD, 3D Systems. Poor long-term potential, a lot of risk associated with it. You're in a steady free fall right now, 0.12. Overall, stock is definitely not favorable. PKI. PKI has great long-term potential, less risk associated with it. However, that short-term trend is starting to dissipate. You're definitely paying closer attention to it right now. Overall, it's a good stock, but that timing is something you need to be focused on for the moment. Let's see, ACH. ACH, great long-term potential. A little bit more risk associated with it. Really strong short-term uptrend. Overall, the stock is favorable. Also, one thing I didn't talk about, and I know with Dr. David Paul talking just before me, we do have people tuning in here today from other markets around the world. If you notice in the upper left, this comes standard with the mobile app. You can tap on it and you can select your different markets and do the same exact analysis on your stocks in those specific markets. Just wanted to point that out because some people, may have missed that there. All right, LOGI. LOGI, great long-term potential, solid fundamentals, nice steady uptrend. This stock is definitely favorable. All right, I'll do two more and then I'll wrap it up and pass it off to Glenn. And also, if you've enjoyed today's stream, if you've enjoyed this, if you've learned something new about how to really maximize the VectorVest stock advisory to your own portfolio, don't forget, as always, smash that like button in the bottom right-hand corner. Let me make sure I got it right. Oh, right there. Right there. Smash that like button for me right now. All right. So let's see. LOGI we just did. We'll do two more. Grow, GROW. So Grow, great long-term potential. Does have a little bit more risk associated with it, though. You have a really nice, strong uptrend. Overall, this stock is favorable still. And then last but not least, we'll do Coin. All right, we'll do Coin. Coin, poor long-term potential, does have a lot of risk associated with it. It is falling overall. Granted, you're only having really a day and a half of trading to go off of, so you're going to see that RT rating fluctuate a lot, especially with it just starting to trade. Also, as a side note, because the stock just came out onto the market a day and a half ago, they haven't been consistently trading long enough to have that longevity that you look for fundamental analysis. So therefore, the fundamental indicators such as RV, RS are going to be below 1, which tells us that this is a speculative play. And with the stock just starting to trade a day and a half ago, I think we can all agree, yeah, this stock is definitely a speculative trade right now. So with this, poor long-term potential, you have a lot of risk associated with it. You're steadily dropping. Overall, the stock is not favorable. What is the link for Facebook? VectorVest. So it's facebook.com/VectorVest7. Florence, hopefully that helps you out. All right, and I'll leave you guys off with the market timing. So right now we are one tick into the green still. We're still mildly bullish. We're back to mildly bullish. We advocate buying safe, undervalued stocks that are rising in price at this time. And then we look at the advanced decline zone, basically that 1-to-1 ratio right there. So once again, thank you all for tuning in here today. I'm glad that you guys could all be here, make it out to the Financial Freedom Summit. Learn as much as you guys can because this is a rare opportunity that you get this kind of education for free. So take full advantage of everything that we have here to offer you guys today. So on that note, take care. Have a great rest of your day. Be safe out there. And if you want to, feel free to come over to our Facebook page and tune in every Thursday at 11 a.m. Eastern. So Glenn, I will pass it off back to you.